Hello everyone, we are going to discuss about the previous year question of Corporate Accounting 2 from University of Madras in April 2013 part C. This question is from alteration of share capital and internal reconstruction chapter. Let me read the question. The balance sheet of Star Limited as on 31st/12/1995 was as follows. In liability side, 32,000 preference shares of rupees 10 each. The amount is rupees 3,20,000 and 96,000 ordinary shares of rupees 5 each. The amount is rupees 4,80,000. 16% debentures rupees 1,92,000. Creditors rupees 3,20,000. Reserve funds rupees 1,600. The total liabilities are 13,13,600. In asset side, goodwill 2,24,000, land and buildings 3,84,000, plant and machinery 2,80,000, loose tools rupees 80,000, stock rupees 64,000, debtors 96,000, bills receivable 32,000. Cash 9,600, profit and loss account 1,44,000. The total assets are 13,13,600. Upon revaluation of the assets, it was found that goodwill was worthless and that the assets were overvalued to the following extent. Land and buildings by rupees 64,000, plant and machinery by rupees 40,000, loose tools by rupees 48,000. A provision for bad debts to the extent of rupees 8,000 was necessary. A scheme of arrangement and reduction was approved by the court and also by joint meeting of shareholders and creditors on the following lines. The creditors to accept 16% debentures to the extent of their dues and the balance to be paid 6 months after date. And the second, the preference shares to be reduced to shares of rupees 5 each. The asset can be reduced to the revalued figures and the debit balance in the profit and loss account also be write-off. And the second, the ordinary shares be reduced to shares of rupees 1 each. Draft journal entries for giving effect to the above scheme and prepare the reconstructed balance sheet. Based on this information, we are going to find out the journal entries for capital reduction and we are going to prepare the reconstruction balance sheet. First, we are going to discuss the journal entries. The first journal entry is creditors account debtor 1,92,000 to 16% debentures account rupees 1,92,000. It means the creditors accepted 19% debentures of Star Limited for their off of the dues. It means 1/2 portion the creditors took the debentures from the Stars Limited and balance will be settled later. And the second journal entry is a preference share capital account debtor. It's a old value. The old value amount is 3,20,000. It means 32,000 multiply with 10, which we have to mention in the debit side in rupees column. And to preference share capital account new value, it is from the adjustment 32,000 multiply with 5. The amount is rupees 1,60,000, which we have to mention in the credit side. Then we have to find out the difference value in the credit side. The difference value is 1,60,000. It means 3,20,000 minus 1,60,000. So that is called capital reduction. To capital reduction account creditor 1,60,000. So in narration, being the company has reduced its preference shares price from rupees 10 to rupees 5. The number of shares will be the same. There is no any changes in the number of shares. The number of shares is 32,000. And also we found a capital reduction value. And the third journal entry is a Landon building account data. The new value So the old value is 3,84,000 plus the adjustment value is 64,000. It means the Landon building value has increased or appreciated. So the total Landon building value is 4,48,000, which we have to mention in the debit side. And plant and machinery account data new. The old value is 2,80,000 plus the adjustment value is 40,000. The total value is 3,20,000. It is also the plant and machinery value as increased. And the loose tools account data, the new value. The old value is 80,000. Adjustment value is 48,000. So 80,000 plus 48,000, the total value is 1,28,000, which we have to mention in the debit side. And to Landon building old value, the old value is 3,84,000, which we have to mention in the credit side. To plant and machinery, the old value is 2,80,000, which we have to mention in the credit side. And to loose tools account, the old value is 80,000, which we have to mention in the credit side. So the difference value is in the credit side is 1,52,000. It means 4,48,000 plus 3,20,000 plus 1,28,000 minus 3,84,000 minus 2,80,000 minus 80,000. So we get the difference value is 1,52,000. That is called capital reduction. In narration, being made journal entry for overvalued assets, and also we found capital reduction value. Overvalued means appreciation, undervalued means depreciation. If there is any depreciation, that amount will be adjusted with the total capital reduction. If there is any appreciation in the assets, that will be for calculating capital reduction value. And the journal entry 4 is ordinary shares account data, old value 96,000 multiply with 5. The total amount is 4,80,000, which we have to mention in the debit side. And to ordinary shares account new 96,000 multiply with 1. The total value is 96,000, which we have to mention in the credit side. So the difference value is 3,84,000. That is called capital reduction. It means 4,80,000 minus 96,000. In narration, being the company has reduced its shares price from rupees 5 into rupee 1, and also we found capital reduction from ordinary shares. And the fifth journal entry is capital reduction account data. The capital reduction total amount is 1,60,000 plus 1,52,000 plus 3,84,000. The total capital reduction amount is 6,96,000, which we have to mention in the debit side. And to goodwill account creditor 2,24,000, and to bad debts amount is rupees 8,000, and to profit and loss account asset side 1,44,000. So these are the things are from adjustment as well from the asset side of the balance sheet. After mentioning these things in the credit side, then we have to find out the difference value in the credit side. The difference value is 3,20,000, that is capital reserve. It means that amount will be transferred to the capital reserve account. So 6,96,000 minus 2,24,000 minus 8,000 minus 1,44,000, we get 3,20,000 as capital reserve. In narration, the company has written off its intangible assets and fixed assets, and also we found capital reserve amount. Intangible assets are goodwill, copyrights, patent rights, and industrial design rights. Fixed assets are preliminary expenditure, profit and loss account in the asset side, underwriting commission, discount on issue of shares, discount on issue of debentures. And then we are going to find out the notes to accounts for preparing balance sheet. Note number 1 is share capital. Under the share capital, issued and paid up capital. The preference share capital new 32,000 multiply with 5. The amount is rupees 1,60,000. Ordinary shares new 96,000 multiply with 1. The amount is rupees 96,000. Then we have to add this amount. We get the total amount is 2,56,000. That is share capital total value. And the note number 2 is long-term borrowing. Under the long-term borrowing, we have to mention 16% debentures. The amount is rupees 1,92,000. And note number 3 is reserve and surplus. Under the reserve and surplus, reserve fund, the amount is rupees 1,600, which is from the costing, and capital reserve 3,20,000, which we have already found. The total reserve and surplus is 3,21,600. It means 1,600 plus 3,20,000. And note number 4 is trade payable. Under the trade payable, we have to mention the creditors. The amount is rupees 3,20,000. And note number 5 is tangible assets. Under the tangible assets, we have to mention the fixed assets overvalued or appreciated. It means the fixed assets values have increased. Landon building, the old value is 3,84,000. The added value is 64,000. So 3,84,000 plus 64,000, we get the total Landon building 4,48,000. It's a new value. And plant and machinery, the old value is 2,80,000 and the adjustment value is 40,000. So the total plant and machinery value is 3,20,000. And loose tools, the old value is 80,000 plus adjustment value is 48,000. So the total loose tools amount is 1,28,000. Then we have to add this amount 4,48,000 plus 3,20,000 plus 1,28,000. The total amount is 8,96,000. That is note number 5th total. And note number 6th is trade receivable. Under the trade receivable, we have to mention the debtors. The value is 96,000. And the provision for bad debts, the amount is rupees 8,000, which is from the adjustment. That amount will be adjusted with the total debtors amount. So 96,000 minus 8,000, we get the balance value of debtors amount is 88,000. And bills receivable, the amount is rupees 32,000. The total amount is 1,20,000. It means 88,000 plus 32,000. That is note number 6th total. And we are going to prepare the balance sheet of Star Limited as on 31st/12/1995 and reduced. It means capital reduced. First we have to mention the equity and liabilities in the particulars column. Then we have to mention the shareholders funds. Under the shareholders fund, we have to mention the share capital, that is note number 1 heading, and number 1 will be mentioned in the note number column. And the note number 1 total is 2,56,000, which we have to mention in the rupees column. And the reserve and surplus is note number 2nd heading, that is mentioned in the particulars column, and number 2 will be mentioned in the note number column. Note number 2nd total is 3,21,600, and we have to mention the non-current liabilities in the particular column. So under the non-current liabilities, we have to mention long-term borrowings, that is note number 3's heading, and number 3 will be mentioned in the note number column. Note number 3's total is 1,92,000. And we have to mention the current liabilities in the particulars column. Under the current liabilities, we have to mention the trade payable, that is note number 4th heading, and number 4 will be mentioned in the note number column. Note number 4th total is 3,20,000. Then we have to add this amount. We get the total equity and liabilities. It means 2,56,000 plus 3,21,600 plus 1,92,000 plus 3,20,000. The total value is 10,89,600. That is equity and liabilities total. And Roman letter 2 is assets. Under the assets, we have to mention non-current assets. Under the non-current assets, we have to mention tangible assets. That is note number 5th heading. And number 5 will be mentioned in the note number column. And note number 5th total is 8,96,000, which we have to mention in the rupees column. And we have to mention the current assets. Under the current assets, we have to mention trade receivable. That is note number 6th 18, and number 6 will be mentioned in the note number column, and note number 6 the total is 1,20,000 and the stock value is 64,000. There is no any note number and the cash value is 9,600. It is also doesn't any note number. Then we have to add all the asset side amounts. 8,96,000 plus 1,20,000 plus 64,000 plus 9,600. So the total assets are 10,89,600. It means 8,96,000 plus 1,20,000 plus 64,000 plus 9,600. So the total asset amount is 10,89,600. That's all.